By 2030, emerging economies in the East are expected to grow at nearly 4% per year, almost 3 times faster than Europe and the United States. The global economic center of gravity is shifting, and most people don't even realize it's already happening. Welcome to SOM Research, where we break down complex economic ideas into simple, practical insights. Today, we're talking about one of the biggest shifts of our time, the movement of global economic power from west to east. This isn't a prediction anymore. It's a trend already backed by data from global institutions and real-world changes. And more importantly, it could shape your financial future. Pillar 1, the growth gap. Advanced economies like the US, Europe, and Japan are growing slowly, around 1.5% per year. But emerging economies in the East are growing close to 4% annually. India alone recorded 7.8% GDP growth in early 2025. This gap isn't temporary, it's structural, and it's widening. Pillar 2, demographics. Here's the real engine behind this growth. India is becoming the most populous country, with over 1.5 billion people, and most of them are young. Nearly 70% of its population will be working age by 2030. Compare that to Europe, where the workforce is shrinking. Fewer workers means slower growth. More workers means more production, more consumption, and more economic expansion. This is what economists call a demographic dividend, and Asia has it. Pillar 3, manufacturing and supply chains. The East isn't just growing, it's becoming the factory of the world. China already dominates global manufacturing. At the same time, companies are shifting production to countries like Vietnam, Indonesia, and Thailand. This strategy is called China Plus One. The result, a massive manufacturing boom across Asia. Even India is pushing hard with incentive programs to attract global companies. Supply chains are being redesigned, and the East is at the center of it. Pillar 4, technology. Eastern economies are no longer just catching up. They're leading in areas like AI, electric vehicles, semiconductors, and green energy. China's investing aggressively. India's tech sector is expanding rapidly. ASEAN countries are becoming key players in global supply chains. This isn't imitation anymore. This is innovation. Let's look at how this plays out in the real world. India, ASEAN, China. India is one of the fastest-growing major economies. A young population, rising consumption, and strong policy support are creating massive opportunities. This is the same growth cycle that once powered China. ASEAN countries like Vietnam, Indonesia, and Thailand are becoming global manufacturing hubs. Foreign investment is pouring in. Infrastructure is expanding, and their economies are accelerating fast. China remains the backbone of global manufacturing. Even when companies move production elsewhere, they still depend on Chinese supply chains. That's how deeply integrated China is in the global economy. Now, here's the question you should be asking. What does all of this mean for you? Because this isn't just about global economics. It's about where wealth will be created in the next decade. Here's the bottom line. The East is growing faster, and this trend is long-term. India has one of the strongest demographic advantages in the world. ASEAN is emerging as a powerful manufacturing hub, and China continues to dominate global production. For investors, this changes everything. Diversifying beyond Western markets may not just reduce risk, it could be the key to capturing future growth. The shift is real. The data proves it. The only question is, are you ready for it? If you found this video valuable, make sure to like and subscribe to SOM Research. We break down complex economic trends into simple insights every week. And tell me in the comments, which economy do you think will dominate by 2030? India? Vietnam? Indonesia? Let's discuss. See you in the next one. Brought to you by SOM Research. Subscribe for updates. Like I share is subscribe. See you.